How to analyze your good chart properly using your smartphone. Most of us as forex traders, we don't have a computer to analyze our chart. So today I will show you the correct way to use your smartphone to make a better analysis for good execution and taking of good trades. So first of all, what you have to do is to go to the higher time frame, because what we're doing now is using a top-down analysis, and doing a top-down analysis involves analyzing the chart from a higher time frame down to a lower time frame. So our time frame we'll be using is the 4 hour, 1 hour, 15 minutes, and the 5 minutes time frame. That's what we'll be using to do our analysis on our smartphone. So first of all, what we do, we zoom out of our chart. My chart is already zoomed out. We zoom out to identify the direction of the market. Then we zoom out, we look closely to see the direction of the market. From what we can see that the market is in an uptrend. If we use our trend line and take from this low, we can see the market is in an uptrend. So we've identified the direction of the market, stating that it's an uptrend. The second is we plot our zones. Our zone is more like an area of resistance and support, or area of demand and supply, but I'll call it my point of interest. So we'll plot our point of interest on the chart, and here we have to now zoom in to see clearly, so we'll be able to plot our zones on the chart. So I'll take my zone, I'll plot it here. I have a nice zone here, so I plot the zone here. Then I'll go to my 1 hour time frame to see if I can refine the zone to see if there's any adjustment I need to make. Then I have to zoom out so I can see the full view of the chart. So what I have to do is adjust the chart, my zone a little, so it can cater for most of the touches. So after identifying our direction of the market, we plot our zone, and the zone we plot it on the 4 hour time frame, because that's where market respect the most. Higher time frame is the king. Higher time frame is the king to all analysis. Whatever you're doing, you have to first of all go to your higher time frame. I'm using the 4 hour time frame as our area of concern, so our higher time frame analysis. That's what we're using, the 4 hour. So after plotting a zone, after getting a zone, we zoom in, then auto fit it to the screen size. Okay, then we look for another zone. Now this is a major zone. Then we plot another zone. Now I'm plotting it here because this is a previous high. This is a previous high acted as so I'm looking at a zone areas where market would have likely reacted. Then yeah, I have my zone here again. I have my zone here. I have my zone here. Then I have this zone here. I have this zone here. So overall, the market is in an uptrend, but what I am currently doing is analyzing the market based on its current move, what is happening at the moment. I have my trend line, which is this the red line that has been drawn out to give me an understanding of what I should be doing. So since I know this trend line has not been broken, I'll be looking for more of buy. But by taking the temporary short positions, I'll be careful of the overall direction of the market. So after marking out my zones on my 1 hour, you can see how markets react to this various zone. Then I zoom out and see if I can draw, if I can have a trend. Clearly there's a trend here. We have a trend here and it was broken. See how market broke out of this trend and had the confluence, the trend line, and a resistance level which turned support. We have a nice confluence here. Then see how the market price dropped aggressively down. So looking at this chart, we've already know we've gotten a direction, an idea of what the market is doing. Always bear in mind that before taking your trade on gold, you go to your higher time frame, 4-hour time frame, to identify the direction of the market. Secondly, you plot your zones to give you an area of where price will be moving to, because gold moves from zone to zone. So it's very important you have your zone on your chart. Very important you mark out your zone. For on no reason should you take out your zones, because that's what you're working with. Gold move from zone to zone. So after taking out your zone, you can see from here how price broke out from the trend line and start selling aggressively. Now if I should enter this trade, how would I have entered? Since I have a confluence here, I will go to my 15 minutes time frame and see if I have an opportunity. But yes, I have a very small, I have here, I can see how price reacted here. So if I was to enter this trade, I will go to my smaller 5 minutes time frame. That's the time frame I'm using for my entry. My 5 minutes time frame is for my market entry and execution. So looking at the 5 minutes time frame, I can see that we had a break and a retest to the trend line, but how then would I have entered it? I had a counter trend line, I had a counter trend. So I saw how price reacted here in the zone and it broke out. So I had this minor price reaction here. So I would have waited for price to, since it's still ranging in the zone, and that's a high, this is a high probability trade, it's staying in this zone. I'm taking my counter trend and wait for price to break out of the counter trend and take my short position. I take my sell position here at the breakout. Then my stop loss would have been overall at this high. Then my TP would have been at this zone. Since I know gold move from zone to zone, I would have taken it out from this second zone, this zone here. I would have taken my trade out from this zone here after this breakout. Taking my trade here, then see if there's still an opportunity for me to open another position. And since it's still ranging, I would have go use the counter trend line and wait for a breakout. Then I would have used the counter trend line here on this zone, then wait for price to break out. Then since it is broken out aggressively, I would have taken a sell position. Then after it breaks out of this this zone, I would have waited to see what price is doing, then and take my counter trend line again, place my trade with my stop loss. Just remember, while doing this, make sure you put your stop loss above, it should be above the previous high. Then we go in all short, we go in short. So guys, you just know that gold moves from zone to zone, and whenever price is reacting on your zone, don't be in a hurry to take a trade. Wait for price to react on that zone, then refine your entry before executing your trade. Thank you very much. In my next video, I'll be showing you how to place your entry and exit using this analysis. Stay tuned for my next video. Bye.